watching NDTV Profit. I am Mahima Vachrajani. CCL Products is in focus after its Q2 earnings, where revenue was up around 21%, EBITDA was up 24%, margins have improved a tad bit, and net profit was up around 21%. But to discuss as to how the quarter has gone by and how things are shaping up for CCL Products, we're joined by Mr. Praveen Jaipuriar, who's the CEO of CCL Products, who joins us now. Welcome to the show, Mr. Praveen. First off, I want to understand what is the volume versus value growth been like in this quarter, and also what is the EBITDA per kg for this quarter?
So the volume has been, in the range as we had earlier predicted, that we are looking at between 10 to 20% kind of a growth, which a lot of people had asked that this is a bit broader than what we have earlier been given guidance as. But what considering the global coffee prices being on the boil and the volatility, we were wanting to be a little more careful because a lot of long-term contracts are not so forthcoming as it used to be. So keeping that guidance and our projections in mind, this quarter also we had a very similar growth. It was closer to high single digits, closer to 10% or so. So that's the kind of volume growth, and which meant that we got a price growth of another 10 to 12%. And there has been a better EBITDA per kilo realization, and that's because of the fact that considering that there is a huge amount of competitiveness that has built around high coffee prices. But some of our opportunistic contracts is something that we did not focus much on, but concentrated a lot on our long-term partners, the direct brand owners, so that we can focus really on better margin products. And that meant that our EBITDA per kilo also went up by approximately 5 to 10%. And that's the reason you have seen a better margin profile for us this quarter.
Got it. Got it. Last quarter, you had said that long-term contracts are not reviving significantly due to volatility in coffee prices. But this time, I believe you said that long-term contracts are now reviving, I believe.
No,
Is
not
that the
really.
trend?
No, not really. The trend continues to be the same. We'll have to wait and watch. Yes, we are pushing for a lot of it. It's actually, the long-term contracts do come in when there is stability in the market. Our challenge is that the market has been volatile. There have been ups and downs. So people get into a wait and watch mode. And that is what we are experiencing. We are expecting that, post December, when a Vietnam crop comes in, there'll be a sense of stability. And that's when we'll start getting more long-term contracts.
Got it. And how does this overall impact your top line? Because this has been happening since, past few quarters. And going forward also, if you're expecting this to continue, how does this overall impact your top line?
So not really, we have been till now been very good with our top lines, even after so much of challenges. So we don't expect much of an impact. Yes, building volumes as we had for last 3 years, if you track our quarter-on-quarter performance, you will see that we were very aggressive on volumes, getting 18-20% volume growth consistently. That becomes a little bit of a challenge. So the volume, that's the reason we had given a guidance that probably this year we could end up anywhere between 10 to 20. So that's the uncertainty that we still grapple with. But come to think of it, in spite of these challenges, we've been able to manage it fairly well. So we don't see much of a stress in terms of top line or bottom line.
Got it. And in terms of, the debt levels, you'd mentioned that you are anticipating rising of debt levels, and this is on the back of volume growth as well. What's the status right now, and till how many quarters do you expect the debt levels to rise? And this, I believe, will be working capital debt, right?
Right. So we have approximately 1,900 crores of debt approximately, and out of that around 1,1300 crores will be working capital, and the others are long-term debt for our capacity expansion. So, the situation remains the same. We are not foreseeing any quick change. But the good part is that, all our working capital debt is for confirmed contracts. We only buy green coffee for which we required working capital only after order confirmation. So we're not too worried on that front. Yes, once the coffee prices come down, our working capital debts will also come down, and that will have a favorable impact on the balance sheet. But really, we are not, because we don't take debt to build inventory. So
Got
that's
it.
something that we're not really worried about.
Right. Talking about inventory, last quarter you had said that global retailers had not yet started increasing the inventory levels yet. What's the status right now? What are the trends you're observing there?
Similar trends. They're all on razor thin inventories as of now. As I said earlier, unless and until the stability comes in, probably such kind of trends will remain. There was a little bit of an inventory buildup because they also want a little bit of a buildup during season time and festival time and all that. So, but barring those a few instances here and there, the situation remains the same.
Got it. Praveen, coffee prices have been volatile since the past few quarters. And, overall, your sense of what's happening overall in terms of the international demand supply, and how do you expect the prices to pan out so far by the end of FY25?
So, now it has become anybody's guess. All our guesstimates for coffee prices in the future have gone, for a toss.
Yeah.
So we're really not in a predictive mode. The coffee prices, the large two chunks where the coffee comes is South American market and the Southeast Asian market. And what has happened is that, this spiral started 2, 3 years ago when we saw some frost in Brazil, which led to lower output in Brazil. So that continued for 1.5 to 2 years. And as in now, when Brazil has started to stabilize and we are seeing very good output in Brazil, there are talks of El Nino in Vietnam. So there are again talks of short supply in Vietnam, which is making the coffee prices stay at the levels where they are. But a lot of times, speculative forces also enter into coffee trading because coffee, is a very highly traded commodity and there's a lot of interest from the fund guys as well.
Right.
The farmers are rich farmers in coffee, so they also have holding capacity. So all of them play a role, and therefore, as of now, considering the speculative tendencies in the market, we are not in a position to predict. We will see and wait and watch and see quarter on quarter how things goes.
Got it. One last question before I let you go, Mr. Praveen. March ending 24 revenue was around 2,600 crores and margins were at 17%. Your sense of how FY25 will end? Where will the number from 2,600 go to? And margins, where will they be at? And top line, bottom line, everything, if you can give us some guidance on that.
So, we have finished half year. We are at around 21, 22% value growth.
Right.
We hope to continue similar trends. So if you add that to, so we probably looking at a range of 3,200 to 3,400 kind of levels top line. And at EBITDA levels, also similar kind of growths we are experiencing. So last year, I think we were around 450 crores of EBITDA. So similar kinds of growth will come. So that's we are maintaining that value terms top line around 20% or 22% and the bottom line also in similar range is what we will grow at.
And margins?
Margins will be similar because it is also the volume growths are at closer to 10% as of now. So technically the EBITDA growth should have been in the same range, but because we are concentrating more on value contracts and better margin business, we still will be maintaining around 17 to 20% EBITDA growths for the year.